Looking at latest data out of FNB, we've seen civil construction confidence taking a knock in the first quarter this year, declining from an index value of 39 in the fourth quarter of last year to a level of 25 now. Joining us now to unpack some of the detail is Cees Bruggemans, Chief Economist over at FNB. Thanks so much for joining us, Cees. Well, looking at the report, the drop is even more extreme if you look at this on a yearly basis. I mean, we saw the index record 60 points back in the first quarter of last year. And some would say this extreme drop coming as a bit of a surprise now, given all the optimism that's about regarding economic growth moving forward. A surprise for you?
Nothing surprises me at this point in time. The industry is, of course, very much exposed to the infrastructure developments for the big projects, and at municipal and provincial level for the smaller to medium-sized people. And there, I think there has been quite a change over the last 12 months in operating conditions. For the bigger projects, it is the weaker economy, but also the World Cup infrastructure basically nearing completion. The impact, I think, of the financial crisis has been very substantial in terms of changing financing conditions. And when it comes to the smaller to medium-sized companies at municipal level, municipalities, I think, have experienced quite a slowdown in their tax revenue collections. On top of which, you have the usual inefficiencies that you do find there in the way they educate the awards of contracts. And if you add all that up for both the bigger and the smaller contractors, there has been a substantial change in conditions compared to 12 months, 24 months ago.
So where we're looking at confidence levels here, there is this direct correlation between those confidence levels and the actual activity we're seeing in the sector.
Oh, very much so.
Okay, moving on, impact on the industry as a whole, because one would assume that the decline in the availability of new construction products would translate then into a cutting off costs for these businesses, and retrenchment of labor springs front of mind immediately.
Well, there has been a substantial increase in tendering competition. The previous quarter, only 65% of contractors mentioned that. Now it is 85%. There is an enormous intensity there, and of course this erodes margins and it erodes profitability. But we have found, though, that the industry has very much kept the faith in not so far really retrenching on any large scale. There's only been a minimal reduction. And a lot of that has to do, I think, with the fact that the industry is very much aware of ultimately the enormous infrastructure needs that still loom in the future. Yep. And instead of laying off labor on a large scale, teams that are very expensive to put together, they basically have kept these teams on board in the hope, essentially, that dire necessity at some point in time will get the infrastructure machine rolling again. However, if the carrying cost of a lot of this idle capacity that is now in place is very high, and I would suggest that specifically by, say, the second half of this year, there could already have been a lot more labor shedding than what we saw taking place so far.
Well, if we take a look at it so far this year, 2010 is being called a tale of two halves, where pre-World Cup event here in South Africa, there's all this hype and optimism, and many expecting that decline to filter through, in the second half. So clearly that apparent then within this space specifically.
Yeah, except that I don't really blame it at all on the World Cup. I think it has a lot more to do with the skill capacities at the public sector clients, their ability to shepherd these projects. And then secondly, I think the funding problems that we've heard about have a lot to do with the actual financial crisis that occurred worldwide, and the effects of which have been with us as well, besides the cost escalations and the way that has changed things. So there have been project cancellations, there has been deceleration, postponement, rescoping. On a scale which I think has very little to do with the World Cup as such. The World Cup, the completion of that infrastructure, I think, is one feature of a much bigger picture that should be taken into account.
And of course the needs, those infrastructure needs, are still there, especially in some of the predominantly black areas like your water service facilities, your sewage. There are basic needs that need to be fulfilled at this stage. With that being the case, what kind of backlog are we looking at here?
A substantial one. And it is just economic growth that we're looking at. The existing capacities are not really adequate. So in terms of the growth forward, there needs to be more infrastructure capacity. But besides that, you're talking very large scale replacement of existing capacities. In the case of electricity, It is essentially by 2025 that the existing 40,000 megawatts is up for replacement. And when you look at the water infrastructure, it is not just only that you need extra additional water infrastructure, but also the replacement of the existing. And the scale of these things is very, very, very substantial.
If we look at it, you know, in the position that we sit now, I mean, we're seeing this, with all of this being the case, a drop in operating margin, profit margins. Before the crisis, companies within this sector were targeting margin growth of close on double digits. Now, what are their forecasts in that regard?
I have no idea. I'm a macroeconomist, not a financial investment analyst. So you will have to ask that question to somebody else.
Well, certainly the picture is looking gloomy moving forward. We talk of this contraction in the overall economy resulting in the scarcity of work. What's the outlook as far as forecasts are concerned and some of the confidence levels that are out there at the moment?
In a general sense,
Yep.
not in terms of this industry. In that respect, I would suggest that the adjustment in the employment levels are essentially bottoming out at this point in time. Although in certain industries like this particular one, there is still some shedding to go. The civil service, of course, is still adding, so you get a typical change by sector. But going forward, the economic growth rate is still too low to really start generating employment growth on any scale. Besides which, at the end of a recession, in the opening phase of a recovery, you have a lot of potential for productivity gain. And that essentially, I think, is what's going to play out this year. So when you're asking about employment gains overall, I think it is going to be rather minimal for the next year or so. And you need faster growth and ultimately the limits of productivity gains to come into focus before you get really good employment gains again.
Well, on that note, Cees, let's leave it there.